You know, Knight Swift is the biggest trucker in the U.S. and one of the biggest in retail. The company's a bit tight-lipped about its customers, but Walmart is one of many big box customers that use Knight Swift, according to Deutsche Bank. Of course, as e-commerce is booming, it's forecast to grow to 22% of all sales in 2021. And retailers, they're expected to increase their inventory levels in response. In response to that, Knight Swift raising its 2020 and 2021 guidance. And right now, we're joined by the CEO of Knight Swift, David Jackson, to talk a lot more about that. Dave, thanks for joining us.
You bet, Frank. Good to be with you.
So first question we have to ask, your stock, despite a blowout EPS results and you raising your guidance, your stock took a dip after your conference call. It actually went to the positive sometime around noon. What do you think Wall Street learned about your results in the last hour or so that brought your stock 1.5% higher?
Yeah, well, you know, we didn't have an earnings conference call. The stock started real strong, and then it decided to go on a bit of a roller coaster. You know, really, Frank, we're focused on creating good returns and building our business. And we trust that the scoreboard will take care of itself, and we'll leave that analysis to people like you and others to determine the intraday moves. But as you mentioned, it was a good quarter for us, and you know, we're excited about the market as we see it today.
So truck rates and demand, they've really been trending higher in recent months. A lot of that's due to e-commerce. How sustainable do you see that in 2021 and beyond? Do you think even if we have a vaccine or some other development in COVID-19, that people will continue buying online and demand for trucking will be sustained?
Yeah, well, the good news about trucking is, you know, if we plan to buy, wear clothes, and eat food, we're going to need to move it on a truck. And so e-commerce is a new way of delivering those goods. It changes a little bit the flow for the full truckload, but in the end, the full truckload move is by far the most efficient move. It's much less expensive than moving things one pallet at a time as we do an LTL or in a parcel manner. And so as e-commerce builds density, we see more and more shippers find ways to concentrate the volumes and use full truckloads and even consolidate LTL shipments. And so that can have the effect of lowering their overall average cost to move e-commerce goods, which today, when you're moving it, you know, pallet at a time, is 2 to 3, even more times what the traditional move or cost of a move would be to go into a bricks and mortar type supply chain. So we're encouraged by consumer demand in any way that we choose to have it delivered or picked up in a store. So clearly e-commerce is here to stay. I think we've grown in our adoption of using e-commerce day to day, and so we view that as more and more customers using full truckload for their e-commerce supply chain.
David, Kelly here. Can you just tell us what this is a sign of in terms of the U.S. economy? I mean, trucking is such a front lines way to figure out what's going on with consumer demand. Like you said, a lot of it is e-commerce. But what's happening broadly here with this demand, and is it sustainable?
Yeah. Hi, Kelly. I think, you know, we see a very healthy consumer. It seems like the Fed jumped in quick to help the consumers have money. There aren't a lot of alternatives right now for spending money on experiences. So clearly hospitality funds have been shifted in other ways, and goods seem to be the recipient of that. And so we do see robust demand. The other thing we're seeing is that almost every supply chain was disrupted to some degree, some massively, through COVID-19. And so whether that was production of goods that was halted or just their ability to move things through the chain with the appropriate safety measures in place. And so what we're experiencing is that inventories aren't nearly enough for where the consumer demand is today, let alone catching up for where what was lost when we were in a just-in-time inventory with virtually no margin for error with inventory. So
no question.
So the consumer feels healthy, and we see that. We see a lot of runway going into the next 2-3 quarters, well into 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.